Hey traders, welcome to the Market Internal Review for July 7th, 2023. I am recording this on Saturday. So Friday, we did see the bullish move that I had considered for a possibility given the VOLD setup. If you aren't aware of what I'm talking about, you can go watch Thursday's video, July 6th, 2023 Market Internal Review. Skip probably around towards the end to see my VOLD assessment and what it could have meant for Friday's session. So Friday, we did see a small bit of a drop down. We basically opened up right above Thursday's ending TWOP price, which was around 438.5. Waffled around there. I saw the ad and VOLD bands looking quite strong with the bright bullish ad, and the VOLD wasn't doing too bad either. And I was a little excited, and that trend was showing an imbalance right out of the gate. That gave me some good confidence that we could see the upside move that I was potentially forecasting for Friday's session. The thing that was a little odd though was tick overall was very weak. We were not seeing any kind of 500 breaks. So we then had the first tick action here, and that brought us into the high standard deviation, first standard deviation of previous day's session, TWOP, which was these 439.5 price. And that's where finally TWOP started to expand and show some signs of life. It is powered by tick movements breaking over the settings, the specified sensitivity level. So in our case, it's 500. This continued after this tick move. We started to see some actual action. Now, some inverted action. So SPY's dumping here, and tick is breaking the 500 high. Meanwhile, the tick closures are staying over 0, and they're trending up. So we break down here and we retest this price roughly about here. Okay, we have a strong wick rejection, and we basically make equal lows here off of this wick right here. Seeing everything I'm seeing in the market, we didn't even come all the way back down to previous day's TWOP price. This felt like a pretty good dip buy. Now that's counter to how I set up a lot of other things, but if you look at right about here, we get a strong bull candle right at about 11 o'clock. That's really when the rip took off. So we hit this, reclaim a TWOP. We do oscillate within that first deviation. Shortly after, we get our breakout. Okay, we hit multiple profit targets. Really great trade. We break out of the second deviation high. We tap the third. We kind of sustain there for a while. Then we get this strong bear candle here. So with that being said, you can see there's a couple different opportunities potentially depending on how you like to manage your risk if you're using the TWOP strategy that I reviewed in a past video. You could enter hypothetically here, or you could follow the standard break and retest of the standard deviation high and risk against TWOP, targeting the previous day's standard deviation levels. So that would have been about a 3.5 to 1 risk reward trade. Of course, you can manage this however you want. So yeah, we had this strong bear candle here, and once that was signaled, I noticed already, this candle pattern up here is quite suspicious. No real movement, right? Strong tick closures. We just had a whole cluster of them. And the last one here, which, let's see, that's almost at 1. I guess technically you could say it made a higher high, but a very weak higher high. Every one of these other tick closures, these are strong higher highs. So this one here hits previous day's third standard deviation high. The next one following that breaks out of that level. Then we have a slight pause here. We have a couple dojis. Then we get another one, new high, strong. Then we get this one. Technically it's a new high, but it's maybe what, 10 cents, if that. So to me, these strong closures, how long can they really be sustained? I don't know. But following this and seeing that this last strong tick closure which also was not as high as these other ones. So every time from here down, it is technically going higher on SPY, but tick is not going as high. So we have a little bit of a divergence. So SPY is going up, and while tick is still strong, overall, it's going down. Then we get this cluster here. Then we get a couple dojis. One last check of this level here. This is probably a tick level if we turn that on. Then we get another bear candle breaking back into standard deviation, the first one. So all of this here with add flipping its trend, I'm thinking high possibility for mean reversion, at least to TWOP. Any more than that, I would definitely be targeting the first standard deviation low. And then of course, we've got the previous day standard deviation levels. We got the previous day standard deviation, first standard deviation high for the first one, and then we got the TWOP price itself. And look at that. We hit every single one of them, and price on the day closed right at Thursday's TWOP price. So really crazy. We even get a strong bear closure here at 338. So this was like your morning session high. See how we couldn't break that level? And that was effectively previous day's high. Fascinating. We did see the upside that I foresaw potential of, given VOLD. But boy, they gave it all the way back up. And I checked for news, I checked for other things, and I mean, there's things in the economy for sure that could account for this bearishness, but there was not anything that I'm aware of immediately released on this day to cause this kind of reaction. Flipping over to weekly TWOP. All right, so we had the short week with July 4th, and Monday was real tight. It was a half a session. We had the gap down, retrace back in. We basically consolidated. Look how tight this is within this range. Not a whole lot of tick action. We did see a couple, we saw one strong one on Wednesday. And then we get this huge gap down. Now, the interesting thing is the weekly TWOP, that first standard deviation high from previous week, that's basically where we oscillate. On Thursday, towards the end of the day, we reclaim it. And Friday session, that once we reclaim that, see how we break above, come back down, retest, that's when we had a real breakout. We did not quite make it to previous week's second deviation high. So quite fascinating. The fact that we did close under, but within that first standard deviation from the previous week, does give me some hope that we'll maybe at least see some more consolidation and potentially some upside, but I don't know. Time will tell. We'll switch back to regular session TWOP, and we'll turn on the tick levels. Like I said, I figure we'll have some at the high. Yeah, so here we go. Here's the one at the high I was talking about. And really strong base here with all this kind of choppy downside delivered candle action here. Reclaim, and then we had the rip. So you can see every time we get a collection of wicks, they're always right around these tick levels. Right here, we get that doji and that hammer candle right there. Break back below, consolidate right above the tick level and the first standard deviation high, and then that's where we will break down. And that nice violent closure. Look at this. No bull candles here as we rip right through that old tick level. This one provided no resistance whatsoever. So fascinating stuff. We go to higher time frame tick levels. Very interesting to see that collection right there is at a historic tick level. Same here even. So tick itself, we already kind of know, given that we reviewed the MIT indicator. There's all those clusters as we're ripping through previous session standard deviation levels. And then it gets kind of noisy here at the end. yeah, I guess we were still making some tick highs in the bullish area, but no 500 breaks. Oh, and then we did get some balance on trend, so we'll see that here in a second. But that's interesting. I didn't take note of that. So here's trend. Okay, yeah, look at that. Slapping the balance for just the last couple bars of the session. So another thing, we have the metrics table on MIT, and like I've said in the past, I highly recommend keeping an eye on it. The high for the ad is 2,000. That's a good solid level. That's 2,000 stocks in the New York Stock Exchange are extremely bullish. They're advancing quite heavily and collectively. So you'll notice right around 130, we have our 20 SMA cross down. Okay, we reach our high at 104. We're basically at 2,000. Then we flip. That's where MIT starts to show those red arrows. With VOLD here, you can see we had that traditional, solid, full bull day. VOLD just running, doing its own thing. So as I've said in times past, it's just like I said for Thursday, when SPY was actually holding its price, heading up a little, and VOLD is just dumping. I said that could mean there's a potential for upside on Friday. And then Friday we did get it. Then they gave it all back. But look at what VOLD. Now it did lose the 20 SMA here at the end, but then we ripped right there at the end. So what this could mean, I don't know. You know, the weekends, that's tough. The futures is going to open up, and there's news release, lots of FUD. So I'm not as strong of an opinion on weekends for VOLD analysis. So I'm not as confident to say that Monday we could open up bullish, but anything's possible. But this is fascinating to me. Volume's still pouring into the advancing stocks overall. We went much higher, but SPY gave it all back. I guess I will be expecting a little bit of a bullish move, but that doesn't mean SPY is going to open up where it closed Friday. It could open, $10 lower, and we're going to use the bullishness of the divergence between VOLD and SPY to bring it back up to where it closed just this previous week. Or it could open up the same price as it did on Friday where it closed, and then we rip. I don't know. But it doesn't seem like the buying is done to me, even though the indices definitely sold off. We're going to take a look at Qs here real quick. Okay, Q basically had the exact same day as SPY did. Really nothing to review there. The Dow, Dow pretty much just similar, except for it did sell off harder in that it ended lower than it opened. We'll check Russ. Okay, Russ actually did very well Friday. Wow. Okay, Russ actually had a gap up, cleared all the previous day's TWOP levels, and just basically continued. Did give back some here at the end of the day, but largely ignored this bearish flip towards the end of the day. Fascinating. Okay, we'll check chips out. I've got some chips positions on, and I noticed they had given some back as of end of day Friday. Yeah, they followed SPY and Q. That's not a shock. I'm seeing some AI related FUD this weekend on Twitter and different publications. New NVIDIA, AMD. AMD's really been struggling lately. Intel was they hit 37 and change and then just gave it all back. One other thing that I did not get to bring up the other day was VIX. So VIX did have a spike up at one point. I think it was it Wednesday? No, it was Thursday. Okay, so Thursday we had a spike up in VIX. It started in the morning and it went up to 17. So it hit 17, basically even. And Friday, it spent all that time giving it back. Okay, now we did have a spike back up as SPY was dumping, but this is the first sign of life we've had on VIX for quite some time. Now, notice we hit that 13 level. I think we were even under there for a little bit. I'll zoom my chart out. Yeah, so our lowest was 1272. So would I call this an uptrend on VIX? No, not really. Not in the grand scheme of things. Yeah, the historics lows, 15 is one of them. That 1179, we didn't quite make it to there, but it still could. So, if it's going to retrace any higher, I'd 20, 18.5. I gotta see some real strength coming through 17, and you can see on the day here we actually closed down. So for Friday, so Thursday we had a wick up, we tapped, but then we didn't quite make it. So we got a decent amount of action right around here that we really, and I don't really do TA. I do levels in half dollar and whole dollar increments. And I know some other people do TA on VIX, but I don't really do TA on VIX. I don't do trend lines or any of that kind of stuff. But I do look at the candle formations as far as just big areas. We can head out on the weekly chart here. Monthly. Yeah. Nothing real interesting other than it just gets really wicky down here. It's just that whole area. Okay. Well, that was the main thing I just wanted to bring to your attention, is that we are starting to see a little bit of action from VIX, but I'm not convinced that there's really much of anything actually going on. But I'll keep an eye on it. And with MIT, you can keep an eye on it very easily. It's right down here. So on Thursday, I'm sure if we go back, we do a replay here, I'm sure MIT will be showing, yep, there it is. Volatility 16.9. So, okay, folks, not much else to discuss. I think we covered pretty much all of our bases. Hope you had a fantastic Friday. Hope you got a piece of this. And as always, thanks for watching. Happy trading.